I'm your host, Michael Thayer, and before break, we were talking about the whole down payments, which I want to circle back to real quick, and then the underwriting and all that good stuff. But from a down payment standpoint, I want to make sure everyone hears this is you do not need the big 20% down payment that most people believe they need. You do need 20% to get away from the PMI, which is the private mortgage insurance, which honestly, it's a waste of money for you as a consumer, but it's a mandated thing. There's no way around it, even with my own personal loan.
Right. They're covering themselves in case you decide later I'm going to walk away from this.
Absolutely. That is an insurance policy that you as the consumer are paying for us as the lender, or whoever the lender may be, to insure us up to 80% of your loan in case you walk away. And, with the down payment piece, you can get away with zero down in the right loans with some of the housing development loans, rural development, are also known as USDA loans. If you're VA, if you have any kind of military, Coast Guard experience, National Guard, you can absolutely qualify, or you should qualify for a VA loan depending on your term in the military branch that you were in. So there's a lot of 100% options out there. And then from there, 3%, 3 to 3.5% down gets you into a home today.
Wow.
And you'll have the MI depending on your credit profile. You can possibly buy out of the MI, as I like to phrase it, or do a single premium payment. So there's ways to structure around the MI so it keeps your payment as low as possible. But even with average to decent credit scores, you can do just like a regular FHA loan and still have reasonable MI because they recently reduced the MI rate. But the other piece I want to touch about is appraisals. And appraisals are I don't want to call it a surprise, but I mean, they can be a surprise. Some appraisals can go very, very smoothly. But the biggest challenge I think today that the average consumer just is not prepared for is the appraisal process. And a lot of people, and we've touched on this before in previous shows, is people do not realize that the buyer has to be sold on the house first. So Jimmy, you had like the house that you bought in Georgia, and yes, I want to pay X number of dollars for that. And then the bank has to be sold on it. And it's two totally different set of rules, because you're buying somewhat with your emotions and rationale of, hey, I need X number of square feet to live in.
Right.
I need X number of bedrooms, bathrooms. I need space for storage, whether it's garage or out back or what have you. And this is a good price for what I can do, or what I'm looking for and what I want to do, and I'm comfortable with the payment. The point of the being is, of this whole appraisal thing to bring us back, is the bank has to be sold on the property, which may make no sense to the average consumer, but you got to think about it. Anyone out there listening right now, if you had somebody come up to you and say, hey, loan me $150,000 on this house, what would you do? What would you do, Jimmy? If I came up to you, or anybody came up to you, even if it was a family member, hey, Jimmy, loan me $150,000 for this house over here.
Well, if it was $150, I'd be doing a background check. So you can imagine what $150,000 would be doing.
The last thing before we jump into where the market's going, just the overall expectations you have as a buyer. We've touched on this at the beginning, but I mean, today's market versus, back when you bought a home, Jimmy, you have different reasons for, or consumers have different reasons, I should say, on why they don't want to give up a certain piece of information.
Well, we need a realtor in here,
Yeah.
If Brad was here, maybe we could ask, or, because the thing is, I don't want her lowballing the price thinking, oh, well, he can take the hit.
Right.
Because I've already taken a pretty big hit based on, the market.
Yeah. And the other piece of it is, and I think the agents would tell you, if we had Brad, Marla, Andrea, or anybody else in here, the realtor needs to know, hey, are you going to clear enough money to sell this home? And if you aren't, do you have the means to make the sale work? Because the last thing you want to do is to get into a legal binding contract, and then now you're in breach of contract, which will open you up for legal action if you can't execute that purchase that you signed off on. So it's there to protect you, not to necessarily get into your personal business. But like you said, if one of the agents were here with us today, they'd be able to probably give us a couple other ones. But that's generally the issue they're looking for, is to make sure you're going to be able to get out of the house. And then if you're rolling that money out of that house to another one and you need that money for your down payment, do you have enough money to satisfy your new loan?